Hey everyone, Kevin here with EXMO's weekly crypto news roundup, and I have a really interesting episode for you today because we're going to cover news about Ethereum fees, Stablecoin Whales, and EOS's voice app launching very soon, among other interesting news tidbits. So if you want to get caught up to speed, then all you have to do is subscribe down below to this channel, sit back, relax, and just keep on watching. Okay, so the first topic I want to cover today is how Ethereum's network fees topped Bitcoin's network fee on a daily basis over this past weekend. And the gap is just looking to grow, and this might become a more often occurrence in the future as well. According to on-chain market analysis firm Glassnode, their research shows that on June 6th, Ethereum's network fees added up to almost $500,000 compared to Bitcoin's $300,000. And they termed this the feepening. Remember, the flippening was back in the old bull market, the last one, when Ethereum's market cap almost exceeded Bitcoin's. But this one has to do with the fees, which is pretty interesting. And that can mean several things, like more people are using it, more decentralized apps. So if you were trying to send Ethereum transactions in the past few days, you might have noticed that it took longer to be confirmed and also required more gas and was more expensive for you. And this is because of the network congestion. So we've been long waiting for this Ethereum 2.0, which should address these scalability issues. Hopefully this will still come out sometime this year in 2020. But essentially that's good news because then we can have this increased usage and adoption of the Ethereum network, but also be able to scale and let a lot of decentralized apps and a lot of users send peer-to-peer transactions without having this sort of congestion and without costing us so much, because that is going to be prohibitive for certain applications in the future. The next topic I want to touch on is EXMO, a new analytics feature, or their 7-day profit and loss metric or parameter. This is something you can find in the wallet part of your EXMO dashboard if you're an EXMO user already. But basically they show you the 7-day profit and loss number of a particular currency that you own in your wallet. You can see the screenshot here. It shows you in-depth stats about your Bitcoin position. And there's this really fancy formula that they use to calculate that number. But essentially what you need to know is that it gives you a very accurate way of identifying how your trading strategies have gone. Because after all, that's important for you to tell if your strategy is working and then tweak that to make it a better strategy for you rather than just going in and out of a position at a whim and using your gut feeling without really knowing and analyzing if something is working for you. Besides those individual assets, they also have a P&L parameter for your whole portfolio. So that may be helpful as part of your trading toolkit as well. And so if you are an EXMO user, definitely go check that out. If you're not, you should definitely go sign up, try it out, and keep an eye out for this parameter too, which could be useful for you. Next up, I want to chat about how there are stablecoin whales out there and how less than 6 accounts control 80% of the wealth on these different top stablecoins like Tether, Pax, Gemini USD, Binance USD, USDC, all these ones that we know oh so well. And this was by a report from Coinmetrics, how they analyze these stable coins in terms of the accounts holding them and also the activity, and found out some very interesting things. Like, for example, this wealth centralization for these different types of stable coins. There's a small number of accounts that hold 80% of the supply for each of these popular stable coins. But also another interesting part is that there's a lot of sub $100 transfers that represent at least 20% of the activity for these stablecoins, which means that sure, these whales may hold all these stablecoins, right? But there are a lot of people using it for small transactions like peer-to-peer, for example, and making sub $100 transfers rather than just whales moving huge amounts from like exchange to exchange. So that's an interesting dichotomy and data that we can take a look at thanks to Coinmetrics. Next up, if you've been in the crypto space for a while, you must have heard of Voice, which is a decentralized social media platform launched by Block One or EOS. And they finally have a launch date, but it's still invite only. It's going to be on July 4th for their public invite only beta. And we all know this project has huge ambitions to take over legacy platforms like Facebook or Twitter that a lot of the public and the crypto community as well have been mad about and want to find an alternative for. So if you haven't looked into The Voice yet, they describe themselves as, quote, a transparent, rewards-based social network for creating, distributing, and discovering content. So you can do things with their own internal token called the Voice token, like earn it by watching ads, and then spend it on things like promoting your posts, posting comments, and so forth. It'll be really interesting. I want to try this out as well to see how all those economics work and if human psychology and behavioral economics will allow this to get mass adoption. One thing that they have a huge amount of is a budget. They were able to dedicate $150 million to build this and spend it on a marquee domain name, on marketing, on building the product. So I can't wait to check it out. And maybe you want to check it out as well if it will eventually take over Facebook, Twitter, and the likes. Last but not least, I want to share with you how popular crypto forensics firm Chainalysis, that you may have heard of before, can now trace Zcash and Dash transactions too, even though they're supposedly a lot more private and anonymous than Bitcoin. We all know Bitcoin is not as private as we like because of their UTXO model, which allows it to be traced pretty easily by firms like Chainalysis. And they announced recently that they would add support for tracing Zcash and Dash, which theoretically those protocols make it really hard for people to trace it. But they said because of how they're built, as well as how they're used in practice, this is really not the case that they're too private, and it leaves rooms for investigators and compliance people to investigate the flow of these coins. And so even though these coins are marketed as super private, there are things that Chainalysis can do, like look at usage patterns and other aspects of these transactions that can help them determine who it is and trace the flows, right? So this is interesting because many exchanges in the past moved to delist these coins because they were worried about them violating the AML or anti-money laundering regulations. But Jonathan Levin, chief of strategy at Chainalysis, said that now these exchanges could potentially move to relist these coins because it's not that big of an issue to trace after all. So quite an interesting pro and con of being able to trace these coins. Like on the one hand, it's not as private as you'd wish, but on the other hand, you can get back your liquidity by getting relisted on these exchanges. But anyways, that's it for this week's weekly crypto news roundup. I hope you enjoyed these topics and got caught up to speed. As always, please give us a like, subscribe down below to catch next week's news. Once again, I'm Kevin. I hope you enjoyed this one, and I'll catch you guys next time.